Every trader, no matter how wise or seasoned he becomes, falls for the same thing once. It's a universal experience, a test of discipline that no man escapes when he first steps into the markets. I fell for it myself many years ago, when I believed that trading was only about finding the right stock, or the right move, or the right indicator. But let me tell you something, friend. The markets are far greater than any single rule or pattern. They are a reflection of human nature itself, and human nature, in its greed and fear, repeats the same errors generation after generation. Tell me, have you not seen yourself make a fine profit one day, only to lose it all the next, because you could not resist the urge to take just one more trade? Every trader falls for the illusion of quick profit. They start out humble, cautious, and disciplined. But after a few winning trades, they begin to think the market owes them something. They forget that the market rewards knowledge and punishes arrogance. I have seen more accounts wiped out from overconfidence than from ignorance. A trader may study price charts for years, but if he cannot control his emotions, he will lose it all in a single day. The market does not care how much you know. It only tests how well you obey your own rules. Have you ever broken one of your trading rules because the price just felt right? The beginner believes success lies in the signal. He looks for the perfect method, a secret code that will unlock endless wealth. He spends years chasing systems, but he forgets to study the real truth, the law of vibration that governs all movement in price, the same law that governs the planets in their courses. Price is not random. Time is not random. But when a trader loses sight of that, he falls for illusion. He begins to trade on hope, not calculation. Hope is the most dangerous thing in the market, for it blinds you to truth. Do you ever hope your losing position will come back, instead of cutting it off clean and moving on? There comes a time in every trader's journey when he must learn that success is not made by predicting what the market will do next, but by knowing what he will do when it happens. The market is always right. It is the trader who is wrong. When I was young, I too tried to fight the market. I would see prices rise against me, and I would argue with the tape. I would tell myself it was temporary, that I knew better. But the market does not argue, it simply moves, and it always wins the argument. A man who cannot admit when he's wrong will pay the price until he learns humility. Have you learned to admit when you're wrong without hesitation? Another great mistake every trader makes once is believing that knowledge alone will bring wealth. They study books, they memorize patterns, they master their charts, but they forget that markets move by the rhythm of human emotion. To trade profitably, you must learn the psychology of the crowd. You must learn to stand aside when others are greedy and to buy when they are afraid. But that is easier said than done. When panic sweeps the market, even the strongest trader feels it in his chest, and when euphoria takes over, even the wisest man is tempted to buy just one more share. Have you ever told yourself, "I'll get out at the next top," and watch the market turn before you could act? The laws of time and price never lie. They repeat themselves because man does not change. That is why I studied cycles, the rhythm of nature and the movement of price. The same way the seasons turn and the tides rise, markets follow their natural law. But most traders fall once because they think this time is different. They think the rules no longer apply. They think a new age has come where prices will rise forever. I saw the same illusion in 1907, in 1929, and again many years after. The faces change, the instruments change, but the game remains the same. Do you see the pattern? The illusion of permanence is the trap that catches every generation of traders. Discipline is the foundation of all lasting success in trading. Yet every trader breaks it once. You set your rules, you promise to follow them, but when the heat of the market rises, you forget, you double down, you remove your stop. You say, "Just this once," and that becomes the most expensive lesson you will ever learn. But without that lesson, you will never grow. Every successful trader I've met carries a scar from that mistake, a reminder burned into their memory by loss. Loss is the tuition we pay to the market. The question is, how many times will you pay it before you learn? Money, you see, is not the goal. It is the measure. The real goal is mastery. Mastery over yourself, over your emotions, over your impatience. Wealth comes naturally to the trader who understands time, price, and human nature. When you learn to wait, you gain power. When you learn to act without fear, you gain freedom. The market is a mirror. It reflects your strengths and your weaknesses. If you are greedy, it will expose it. If you are afraid, it will show it. Do you ever notice how your biggest losses come from ignoring your own better judgment? The wise trader knows that opportunity will always come again. The fool thinks every trade is his last chance. He chases every move, jumping in and out without plan or purpose. He believes trading is about excitement. But trading is not entertainment. It is business. It is the business of speculation, guided by law, governed by rhythm, and ruled by time. The man who treats it lightly will lose heavily. I have said many times speculation is as old as civilization. Men have traded grain, land, and metals since the beginning of commerce, but the emotions behind every trade have never changed. Fear and greed, these are the constants. Have you ever found that the hardest thing in trading is not reading the chart, but reading yourself? When you understand the truth, you stop fighting the market and begin to flow with it. You stop seeking certainty and start respecting probability. You stop asking, what will the market do? And start asking, what will I do when it does? That shift marks the beginning of wisdom. It separates the gambler from the trader. Every trader falls once, but only the wise ones rise with understanding. Only the wise learn that time, not luck, is the real master. The market rewards patience and punishes impulse. Remember, every chart tells a story of cause and effect. Nothing moves without reason, but most traders fall for appearances. They see a breakout and chase it, not realizing it's the end of a move. They see a fall and panic, not realizing it's the beginning of accumulation. Price action speaks, but few know how to listen. I have said before, if you learn to read the chart as you would a book, it will tell you everything you need to know. Do you listen to the market, or do you argue with it? And so, every trader falls once, for the illusion of control, for the promise of certainty, for the temptation of easy profit. But from that fall comes awakening. A man who has never lost has never learned. The market is not a place for dreams. It is a place for truth. And truth is often learned the hard way, through the pain of loss and the discipline of time. Every trader falls once for the illusion of quick profit. It begins innocently enough. A man opens his first trading account, his heart filled with ambition and curiosity. He studies charts, reads books, listens to others who boast of their success. The promise of profit appears close, almost within reach. Then, one day he catches his first winning trade. The numbers on the screen move in his favor, his account grows, and a strange confidence settles in. He believes he has found the secret, that he has mastered the market. And from that moment, the illusion begins to take root. Tell me, have you ever felt invincible after a string of winning trades? The illusion of quick profit is the most dangerous trap in the market because it disguises itself as success. The trader sees a few victories and assumes they are proof of skill. He does not yet understand that the market allows easy profits at the beginning to test his discipline. The market rewards him just enough to make him careless. He starts increasing his position size, taking trades outside his plan, and chasing opportunities that once he would have avoided. Every rise in his balance reinforces the illusion that wealth can be made quickly. But the market is patient. It waits until that illusion is strongest before teaching its hardest lesson. Many times, I have seen traders who begin with a small stake and turn it into a larger sum within weeks. Their minds are filled with dreams of freedom and fortune. But when they lose that money, and they always do at first, they are stunned. They think the market turned against them, when in truth, it never changed. It only revealed who they were. A trader who seeks quick profit does not study cause and effect. He looks only at price and ignores the forces that move it. He trades out of excitement rather than calculation. He calls it intuition. But it is really impatience wearing the mask of confidence. I have said before that time is the key to all market movements. Quick profit is the pursuit of reward without respect for time. It is a violation of the natural law. Everything in this universe moves in cycles, day and night, sowing and reaping, expansion and contraction. You cannot rush those cycles any more than you can force the tide to come in faster. A trader who chases profit without understanding time is like a farmer who digs up his seed every morning to see if it has sprouted. He ruins his own harvest through impatience. Have you ever closed a winning trade too soon because you feared losing what you had gained? The illusion of quick profit feeds on emotion. It begins with greed, then grows into overconfidence, and finally ends in fear. Greed whispers that one more trade will double your money. Overconfidence tells you that the market cannot fool you. And fear arrives when the market proves you wrong, stripping away your gains and your pride together. The wise trader learns to recognize this cycle not in price, but within himself. The battle is always internal before it appears on the chart. The greatest mistake a man can make is to believe that profit cures emotion. In truth, profit magnifies it. When I began trading, I too believed in quick success. I made profits in cotton, in wheat, in railroad stocks. My charts were accurate, my analysis sound, and my confidence unshakable. But then the market turned. I lost heavily, not because my method was wrong, but because my attitude was. I wanted results before time allowed them. That lesson cost me dearly, but it taught me what no book could, that wealth built quickly fades quickly. True profit, like true knowledge, is earned slowly through patience and repetition. You see, the illusion of quick profit also blinds a trader to the true purpose of trading. The market is not merely a place to make money. It is a place to learn how money moves. It teaches you how to think in terms of probability, not certainty. It teaches you to read the rhythm of human emotion, to recognize when the crowd is euphoric or afraid. But when you chase fast gains, you skip the learning. You treat the market like a game of chance instead of a science of timing. And the market, like nature, has no mercy for those who refuse to learn its law. A trader who falls for this illusion often justifies it with stories of others who got rich quickly. He hears of men who made fortunes overnight, and he tells himself he can do the same. But what he does not see are the thousands who lost their fortunes trying. The market is full of silent failures. The winners are few because they have learned to wait. They have learned that trading is not about making a quick fortune, but about preserving capital, managing risk, and compounding small gains over time. Patience is not weakness. It is the strongest form of discipline. Have you learned to wait for your setups, or do you still chase every move that looks promising? The illusion of quick profit also destroys the trader's relationship with loss. He begins to see any loss as failure instead of tuition. He forgets that loss is an essential part of the process, a natural balancing of cause and effect. When he loses, he doubles down to recover. When he wins, he grows reckless to repeat it. In both cases, emotion replaces logic. That is how accounts vanish, not through a single bad trade, but through a series of emotional reactions that compound into disaster. To break this illusion, a trader must redefine success. Success is not making a profit quickly. It is following your plan perfectly. If your trade loses but you obeyed your rules, that is success. If your trade wins but you broke your discipline, that is failure. Profit means nothing without consistency. Every great trader you will ever study, whether in my time or yours, learned this truth after falling for the illusion once. The fall is necessary, but the recovery is what defines the man. So, remember this: when the market gives you easy money, it is not a gift. It is a test. It is asking whether you will take that success and build discipline, or whether you will believe that fortune comes without time. The trader who believes in quick profit will always lose it just as quickly, because he has not earned the understanding to keep it. The trader who learns patience, who treats the market as a teacher rather than a slot machine, will one day master both himself and his craft. The market punishes arrogance more than ignorance. I learned that lesson the hard way, as every trader must. A man may be ignorant and still survive in the market if he has humility, but once he becomes arrogant, his downfall is certain. Arrogance is subtle. It hides behind confidence and calls itself experience. It grows in the shadows of success. A few good trades, a stretch of profit, and the trader begins to believe he has mastered the market. He forgets that the market is greater than any man. It is not to be conquered, only to be understood. Tell me, have you ever caught yourself thinking you could not possibly be wrong about a trade? Arrogance begins when a trader stops listening. He no longer studies the chart with curiosity but with certainty. He looks at price movements not as signs to be read, but as confirmations of what he already believes. He starts forcing his will upon the market. He says, "It must go up," or "It cannot fall further," as though the market cared for his opinion. The truth is, the market moves according to its own law of supply and demand, its own rhythm of time and price. It does not bend to emotion or belief, yet arrogance blinds a trader to this reality, making him mistake opinion for law. I have often said that a trader must approach the market with the same respect a sailor gives the sea. You may understand the tides, the wind, and the stars, but if you forget for one moment how small you are compared to the ocean, it will destroy you. The same is true in speculation. You can read every chart, calculate every cycle, and still be caught in a storm of unexpected movement. Arrogance makes a trader believe he can outthink the market, that he is immune to its corrections. But the moment you believe you are safe from loss, you are already in danger. Have you ever held a position too long because you thought the market had to come back your way? Ignorance is curable through study, but arrogance resists correction. When an ignorant trader loses, he seeks to understand why. He studies his charts, reads his notes, and adjusts his methods. But when an arrogant trader loses, he blames everything except himself. He blames the market, the news, the brokers, even the cycles themselves. He refuses to see that the error was not in the chart, but in his own pride. He begins to trade out of revenge, to prove he was right all along. That, my friend, is how small losses become great disasters. I remember many traders in my time who began with modest success and ended in ruin. They could read the market well, but success made them careless. One man I knew made a fortune in the cotton market. He studied diligently, watched the seasonal trends, and used sound judgment. But after a year of winning, he stopped keeping his records. He said, "I know this market now." When cotton reversed, he ignored the warning signs. He refused to take his loss. He said the correction was only temporary. The correction lasted months. By the time he realized his mistake, his fortune was gone. The market had taught him the cost of arrogance. Arrogance blinds a trader to risk. It whispers, "You don't need to stop this time. You've studied the pattern. You can't be wrong." The humble trader, on the other hand, knows that risk is part of the business. He accepts loss as the cost of doing trade. He understands that the market's first purpose is not to reward him, but to test him. That is why the humble trader survives while the arrogant one vanishes. The market does not destroy men, their pride does. Have you ever ignored a stop-loss rule because you were sure the market would turn in your favor? Another form of arrogance is believing one knows all there is to know. I have spent decades studying cycles, time periods, and price relationships, and still I learn something new with every chart I study. The market is a living mechanism, reflecting the ever-changing mind of the public. To believe you have nothing left to learn is to declare war against nature itself. The greatest traders I have known were also the most humble. They studied the market daily, recorded every movement, and respected every loss. Their humility protected them from ruin. Arrogance also appears when a trader confuses luck with skill. A few trades go his way, and he begins to believe his insight is superior. But luck has no loyalty. It will abandon him the moment he forgets the rules that brought him success. I have seen men who could forecast accurately for weeks suddenly lose all their profits because they mistook temporary fortune for permanent skill. The market allows arrogance to grow for a time, only to punish it later with precision. It lets you believe you are right, until it shows you how wrong you can be. There is a saying that every trader must earn his humility through loss. It is the loss that breaks the illusion of control. When the market moves against you despite your perfect logic, you begin to see the limits of your knowledge. That moment, painful as it may be, is the beginning of true wisdom. Arrogance cannot exist where there is awareness of risk. The trader who respects risk trades small, follows his plan, and thinks in probabilities, not certainties. He knows that any trade can fail, and that knowledge keeps him safe. The punishment for arrogance often comes not in one large loss, but through a slow erosion of capital. The trader becomes complacent. He stops keeping records. He takes larger positions. He begins to trade from memory rather than method. His account shrinks quietly, almost invisibly, until one day he wakes to find the damage complete. The market does not need to strike quickly. It simply waits for arrogance to destroy discipline. Have you noticed how your biggest losses always come after your longest streak of wins? To guard against arrogance, a trader must remind himself daily that the market owes him nothing. Each day is new. Each trade stands on its own merit. Yesterday's profit does not guarantee today's success. The only constant is discipline. The trader who checks his ego at the door and approaches each session as a student will always outlast the one who enters as a master. Arrogance seeks to dominate the market. Humility seeks to understand it. The difference between the two is survival. The market punishes arrogance not because it is cruel, but because it demands respect. It is the great equalizer, stripping away illusion and testing every man against himself. No matter how much you have studied, no matter how much you have earned, the moment you think you cannot be beaten, you have already begun to lose. The market does not destroy the wise. It humbles them again and again until they learn to listen more than they speak, to observe more than they predict, and to respect every movement of price as the voice of truth. Hope is the most dangerous position in any trade. It begins quietly, almost invisibly. A man takes a position, confident in his reasoning. The chart looks right, the setup seems perfect, and the first few ticks move his way. But then the market hesitates, turns, and starts to move against him. At first, he tells himself it's only a small pullback, nothing to worry about. He watches the price dip a little lower and says, "It will come back." That is the moment when hope enters the trade, and from that moment, the trader is no longer dealing with the market. He is dealing with his own illusion. Tell me, have you ever held a losing trade longer than you should, just because you hoped it would turn? Hope has no place in speculation. The market does not care what you hope for, what you need, or what you believe should happen. It moves according to its own law of supply and demand, governed by time and volume, unaffected by any man's wishes. Yet traders cling to hope as if it were a strategy. When a trade goes against them, they stop reading the chart and start praying to the market. Hope replaces discipline. They no longer analyze, they rationalize, and that is where losses grow roots. I have seen traders who could calculate cycles with perfect accuracy and yet lose their fortunes because they refused to accept what the market was showing them. They hoped their analysis was right instead of seeing that the evidence had changed. Hope clouds reason. It blinds the trader to the simplest facts. A chart that once looked strong now shows weakness, but the hopeful trader cannot admit it. He says, "It's just a temporary dip," or "It will recover when the market opens tomorrow." The mind clings to comfort instead of clarity. In the early years of my trading, I too was guilty of hope. I remember one trade in particular. It was in the cotton market. My calculations told me the trend was down, but the news and sentiment were all bullish. I bought instead of selling. At first, the price moved slightly in my favor, but then it began to fall. I told myself it was only a reaction. I added to my position. The market kept falling. I told myself it was oversold and would bounce soon, but the bounce never came. My loss grew, and still I held on, because I hoped I was right. That one word, hope, cost me more than any mistake in my analysis. Hope turns a trader into a prisoner of his own emotions. The longer he holds, the more his identity becomes tied to the trade. To close it would mean admitting he was wrong, and pride does not allow that. So he watches the market sink, convincing himself that recovery is just around the corner. The small loss he could have taken becomes a large one, and the large one becomes ruin. Hope makes him delay action, and delay is fatal in trading. Have you ever noticed how hard it is to close a trade when you're losing, even though you know you should? The disciplined trader, on the other hand, replaces hope with observation. He follows his plan, not his feelings. When the market proves him wrong, he acts without hesitation. He knows that being wrong is part of the business. Every loss taken at the right time is a victory of discipline over emotion. Hope seeks to protect the ego, but trading is not about ego. It is about probability. The market is not an enemy to be defeated, but a mirror reflecting your own strengths and weaknesses. The trader who can look into that mirror without flinching will survive. Hope also blinds the trader to opportunity. When he is trapped in a losing position, his attention narrows to that single trade. He becomes obsessed with getting back to break even. He watches one market while 100 others pass him by. He wastes his capital and his energy waiting for a move that may never come. The wise trader cuts his loss and moves on. He understands that every dollar trapped in a losing position is a dollar that cannot work elsewhere. The hopeful trader forgets this. He waits, and while he waits, time punishes him. Another cruel trick of hope is that it grows stronger the more you lose. The deeper the loss, the greater the desire for redemption. A trader down 10% hopes for a small rally. Down 20%, he hopes for a recovery. Down 50%, he hopes for a miracle. At that point, he no longer trades with reason, he trades with emotion. His account becomes a battlefield between logic and desperation. The market does not care who wins that battle. It only continues its natural course. In my studies of market cycles, I have learned that every movement has its own purpose, its own balance of energy and time. To fight that movement with hope is like trying to stop the tide with your hands. The ocean of price moves according to its rhythm, and the trader must flow with it or be drowned by it. The only weapon against loss is action. Not hope, not waiting, but disciplined action. If your stop is hit, you take the loss. You do not negotiate with the market. You do not plead for more time. You act. That is the difference between survival and ruin. Hope disguises itself as optimism, but the two are not the same. Optimism is grounded in preparation. Hope is born of denial. The optimistic trader studies his charts, plans his entry, sets his stops, and accepts whatever outcome the market delivers. The hopeful trader ignores his plan and trusts his feelings. He says, "The market can't go lower. It has to bounce," or "It always comes back." Those words have emptied more accounts than bad analysis ever has. Have you ever caught yourself saying them while watching a trade slip away? If a trader wishes to progress, he must learn to see hope for what it is. An emotion that belongs outside the trading room. The chart is your teacher, and it does not lie. When the price tells you that you are wrong, it is giving you a gift, the gift of truth. Accept it quickly, and you preserve your capital. Reject it in favor of hope, and you invite the market to take more from you. The trader who builds his habits around reality, not wishful thinking, is the one who endures through every storm. Hope may keep a man alive in life, but in the market, it is poison. It clouds judgment, delays decisions, and blinds the trader to what is right before his eyes. The price moves, the signal breaks, the trend reverses. And still he waits. Hope has turned him from a speculator into a spectator, from a master of his craft into a victim of his emotions. The chart becomes a battlefield, and every tick against him deepens his denial. Knowledge without discipline leads to ruin. Every trader begins with the hunger for knowledge. He studies charts, reads books, listens to great men of the market, and fills his head with theories and strategies. He believes that once he knows enough, success will follow automatically. But the market teaches otherwise. It shows him that knowing what to do and doing it are not the same thing. A man may have all the knowledge in the world, but without the power to control his own actions, that knowledge becomes a burden instead of a blessing. Tell me, have you ever known the right move in a trade and failed to take it? Knowledge is easy to gain. The world is full of information. You can learn patterns, cycles, and technical laws, and you can memorize them until they become second nature. But discipline is something different. It is the ability to obey your own rules, even when your emotions fight against them. Knowledge tells you where to place your stop. Discipline is what makes you honor it. Knowledge shows you the right entry. Discipline keeps you from entering too soon. Most traders fail not because they lack information, but because they cannot master themselves. I have met many students of the market who could quote me numbers, ratios, and theories from memory. They could draw the perfect chart and forecast the perfect move. But when they traded with real money, they could not follow their own analysis. The moment the market moved against them, fear took over. When it moved in their favor, greed took over. Knowledge disappeared the instant emotion entered. A man may know that he should not risk more than a certain percentage of his capital, yet in the heat of excitement, he doubles his position. The chart did not betray him. His lack of discipline did. Discipline is not something that appears naturally. It must be trained, tested, and proven under pressure. The market is the ultimate judge of that strength. When prices rise and fall with speed, when every tick tempts you to act, that is when true discipline is revealed. It is easy to be calm when the market is still. It is hard to be patient when it moves fast. Many traders mistake excitement for opportunity. They think that constant action equals progress. But in truth, the greatest profits come to those who wait.